Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. Festive cheer on the Lal Street. The Sensex and the Nifty rise to the highest level in nearly 4 months after a strong rally. The Nifty Bank nears record highs. All sectoral indices close in the green. Silver and gold continue their record-breaking run as investors look for safe haven buying. PM Gadgil Jewellers, the chairman, says silver is facing a unique problem ahead of Dhanteras and Diwali, with higher prices boosting demand. Says most jewellers are stocked out. President Trump claims Prime Minister Modi has assured him that India will stop buying oil from Russia soon. India's External Affairs Ministry says import policies are guided entirely with the interests of the consumer in mind. Nestle India reports strong revenue growth in Q2 even as margins contract. New global CEO announces 16,000 job cuts worldwide as he targets volume-led growth. The Swiss multinational suffered unprecedented managerial turmoil last month, with the CEO getting sacked for an undisclosed relationship and the chairman stepping down earlier than planned. Quick commerce fueled Zomato parent Eternal in Q2. Revenue triples on a yearly basis. Food delivery net order value up 14%. Zepto raises $450 million from existing investors and a new investor in California's pension fund at a valuation of $7 billion. The company's valuation has doubled in the last 12 months. Aditya Birla Group partners with iconic French brand Galeries Lafayette to tap into India's booming luxury market. Kumaramangalam Birla says the group is in the next phase of strategic acceleration and the portfolio is tilting towards consumer-centric ventures. Johnson faces a major lawsuit in the UK. As many as 3,000 people allege the company knew its baby powder was contaminated with asbestos, a substance linked to cancer, but concealed the risk for decades. J&J denies all allegations. Less than 3 weeks to go for the Bihar elections. The opposition alliance is yet to firm up a seat-sharing deal. Supreme Court tells the Election Commission to explain the deletion of 65 lakh names from the voter rolls, which will be published tomorrow. Well, let's start with the day's market action. The Sensex and the Nifty ending near a 4-month high after a strong session today. The Nifty crossing the 25,600 mark in intraday trade, closing a percent high. The Sensex up over 800 points. That's a 1% gain. And the Nifty Bank near a record high, up by over 1% as well. The mid-caps also putting on strength today. So big buying across the board that we saw. All sectoral indices closing with gains, with realty and FMCG rising 2% each. Here are some top market experts with their big bets this festive season.
If you tell me one sector, it will be financial sector, where I think the overall basis stocks have not performed to their fullest potential. And we are already seeing kind of recovery take place. And there is way to... One is you can play in an asset-light mode, which are capital market-related plays. Okay. And the second, you can even play banks.
Capital market and banks, this can sort of squares with what
I'll give you a most unpopular one.
Yes.
Finance Minister indicated that after all her tax work is done, she wants to turn her attention to public sector.
Okay.
They've already said, for example, they may do consolidation of some of the PSU banks. This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat. Right. If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are, of course, doing fantastically well. Maybe also an interesting place to look for an asymmetrical bet.
Just PSU banks.
So it could be banks, it could be some of these metal names, which is, again, playing into this hard assets theme.
India has done very badly this year relative to peers, emerging market benchmark. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 25-27% underperformance in 10 months. Right. That, beyond a point, does not last. Second is, what are the reasons why FIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets.
Well, market experts, they're weighing in on what we are seeing. From equities to commodities, gold extending its rally to a fresh record high. This is US-China trade tensions and the US government shutdown forces investors towards the safe haven metal. Prospects of interest rate cuts also boosting demand and supporting prices. Prices of silver have seen positive momentum spurred by both consumer and industrial demand. P.N. Gadgil Jewelers MD told CNBC-TV18 that silver faces a unique problem in India. Listen in.
I think silver, like I said, is a unique problem right now. There is too much demand and very little supply in the market. I think everyone is right now almost stock out. What we have, silver is what they're booking, which we're already taken. So there is very little silver which is available for sale right now. Same is the case with silver articles. The karigars don't have silver to make articles now. So the situation is like whatever is there in the store is what you can sell. And the demand just doesn't seem to end. Okay. Every day the prices are going up. The premiums are going up in the market. But the demand is still going further up. So I think it's a unique situation where prices go up, demand should come down, but your prices go up and demand goes up further. And next day wake up, prices go up further, demand further goes up.
Well, prices are up and away. US President Trump claims that India has promised to stop buying Russian oil. Speaking to reporters at the Oval Office, Trump said he's received assurances from Prime Minister Modi that India will hold purchases within a short period of time. Trump also said that now he will get China to do the same. Remember, oil and gas are Russia's largest exports, with China, India and Turkey being the biggest customers. Here's President Trump.
In light of China's export curbs on rare earths, do you view India as a reliable partner going forward? And are you planning to meet Prime Minister Modi in Malaysia? Are you open to talks in terms of trade?
Sure. He's a friend of mine. We have a great relationship. He just said that 2 days ago, as you know. We have a great relationship. No, we were not happy with him buying oil from Russia, because that lets Russia continue on with this ridiculous war where they've lost 1.5 million people, by the way. Russia's lost 1.5 million people, soldiers mostly. This is a war that should have never started, but it's a war that Russia should have won in the first week, and they're going into the 4th year. And I want to see it stop. So I was not happy that India was buying oil. And he assured me today that they will not be buying oil from Russia. That's a big stop. And he's assured me there will be no oil purchased from Russia. I don't know, maybe that's a breaking story. Can I say that? Would you say? There will be no oil. He's not buying his oil from Russia. It started. You know, you can't do it immediately. It's a little bit of a process. But the process is going to be over with soon.
The Indian government is, as I said, is acting having in mind the interests, the national interests of this country in the first place. And our cooperation in energy is very much in tune of those interests.
Well, that's the Russian ambassador reacting to President Trump's comments. Infosys numbers are on your screens. FY26 raises the lower end of the guidance to 2% from 1%. Revenue growth seen at between 2 to 3%. More coming up on Infosys in just a second. The External Affairs Ministry has responded to President Trump's claim, saying that the government's priority is to protect the interests of consumers. The ministry neither confirmed nor denied if this conversation on Russian oil took place between Prime Minister Modi and President Trump. Parikshit Luthra is here with more.
Well, the Ministry of External Affairs is saying that for the last few years, they have been diversifying their energy basket in order to make sure that Indian consumers get oil and gas at the best possible rates, and India's energy security has also been maintained. Having said that, the Indian government, through the Ministry of External Affairs, has said that for the last several years, India has been looking to expand energy imports from the United States, and even the current administration is in favor of expanding India-US energy ties. And therefore, there are discussions ongoing between the two countries. We've not made any comments on whether we are stopping purchase of Russian oil or not. Having said that, we can tell our viewers that according to industry estimates, our energy imports from the US are already up 60% on a year-on-year basis. They've already reached around $8 billion. And sources say that by the end of this year, by the end of December 2025, our energy imports in the US would be around $12 to $13 billion US dollars, and by the end of this fiscal, it could very well be around 24 or 23 billion US dollars. This, according to sources, may even be enough to address the trade deficit. There is a $45 billion trade deficit between India and US, and oil purchases, gas purchases are likely to be a big component, a big way for India to reduce that trade deficit and assure Donald Trump. Let's see how things will go on for the next few days. But what we hear from both India and US is that the commentary of the leaders, of the officials, is now very positive as far as the trade negotiations go. The final contours of the trade deal, of course, are yet to be agreed upon.
All right, Parikshit, many thanks for joining us. And of course, India's chief negotiator, Rajesh Agarwal, currently in the US for talks. Infosys, as I pointed out with its second quarter numbers. Rima standing by now to decode them for us. Rima.
Well, it's a good set of numbers in Q2. The company has delivered a revenue growth of 2.2% in constant currency terms, ahead of consensus expectations of 1.8%. And this marks the second consecutive quarter of strong growth. It was 2.6% in Q1. They followed it up with a 2.2% revenue growth, which basically means in the first half of the year, the company has grown pretty well. Margins, though, have expanded by 20 basis points. So 20.8 has become 21%, but slightly lower than expectations. And also some of the other peers, aided by the rupee depreciation, managed to expand their margins more than Infosys. So while the revenue growth has been strong, perhaps there is a little bit of a miss on the margins. Now on to the full year guidance. FY26, earlier the revenue guidance stood at 1 to 3%. But considering the strong showing in Q1 and Q2, the company is confident at least to raise the lower end of the guidance. So now the new revenue guidance stands at 2 to 3%. But, rough calculation would suggest that, after this performance in Q1 in the first half of the year, maybe, why has the company not raised the upper end of the guidance? I mean, is it because they're just being conservative and they want to see the situation play out? So, that's a little bit puzzling that after this Q2 performance, maybe there was some scope to raise even the upper end of the guidance. Margin guidance on expected lines remains unchanged at 20 to 22%. And for the first half of the year, the company's margins are bang in the middle of the guidance. There's one internal which is actually fairly positive, and that is actually two of them. One is deal wins. So deal wins continue to remain healthy. In Q2, it was strong in Q1. But the second one is attrition. Is the total headcount addition. Remember, the increase in headcount is also in a way seen as a leading indicator of demand. It's only when you have demand visibility will you go ahead and hire. And IT companies went through a lean patch where headcount addition was very modest. Some attributed it to the AI productivity-led benefits. That's the reason why they didn't hire so much, or because of the overhiring that happened in the post-COVID boom. But in the current quarter, Infy's headcount has gone up by 8,200 employees. And I think that as a signal is fairly encouraging. Sandeep Agrawal, fund manager at Sovilo Investment Managers, now joins in. Sandeep, give us your thoughts.
Hi, good evening, and thanks for having me on the show. So I think, obviously the numbers are slightly better than estimate, and also they have adjusted that better than expected number by upgrading the lower end of the guidance. So definitely, slightly better than what was expected, and margin guidance have also been maintained, and TCV is also good. But the only point which I would like to highlight is still, the growth is 2 to 3%, and even if they achieve the upper end of guidance, it will be 3%. So the challenge, I think, is a mature industry, and they can do only this much, and they have done very good in this current environment where, efforts are going down due to AI. So I am not seeing this as a negative number, but again, nothing great to read about on the positive side also.
Okay, so beating modest expectation, and it's not that growth is gung-ho. Point well taken, Sandeep. Thank you for joining in. In fact, as you can see, Salil Parekh has started the press conference.
10% was new or net new work. In addition, we announced a mega deal worth $1.6 billion after the close of the quarter, but before our results announcement. We've added 8,000 employees during the quarter. Our client interactions are showing a strong focus on deploying AI across the enterprise, both for growth and for cost efficiency programs. In doing this, we are continuing to scale our team of forward deployed engineers. With a strong performance in Q2, we change our revenue growth guidance for the financial year. The new guidance is growth between 2% and 3% in constant currency terms for the full year. And our operating margin guidance remains the same as in the past quarter at 20 to 22% for the full year. With that, let's open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Jayesh Sangrajka, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC-TV18.
Thank you. Hi, Salil. Hi, Jayesh. Salil, firstly, on the guidance, the fact that you've tightened it but not really increased it from 1 to 3 to you've gone to 2 to 3%. And, with a 2.2% growth this quarter as well. At the current run rate, you'll at most have a flat growth for the rest of the year for Q3 and Q4 with the current guidance. You'll easily get to the top end. So I wanted to understand, are you not seeing a meaningful recovery, especially when it comes to your manufacturing, retail, these kind of verticals? What kind of headwinds do you continue to see? Because for Infosys, the contribution to revenues is slightly larger than peers. That was one. Also on the H-1B visa issue, if you could give us some details on how many employees you deployed on this visa for this year and the previous maybe a couple of years, and whether you see now this as being something unviable, sending freshers on H-1B visas, to work in the US. If I may also ask, your peers like HCL Tech have also started to quantify their AI revenues. We've been asking you this for several quarters now, and we understand AI cuts across services and sectors. Could you give us a sense of, what exactly you're seeing there? And finally, the Versant Group acquisition. What exactly was the contribution to revenues, and whether you're looking at further M&A in the region or outside? Thank you.
So let me start, and Jayesh will add in a couple of things. First, on the guidance and the environment. So in the guidance, typically we have the second half of the year is slower than the first half. That's the normal pattern. So we've continued with that pattern. Having said that, we've seen good traction, and that's how we've actually increased the guidance. The previous guidance was 1 to 3, and now it's 2 to 3. So in a sense, we have much more confidence with the lower end being increased in what we see into the outlook for the year. In terms of the specific industries you mentioned, we had a good performance on manufacturing, on financial services. We still see constraints in retail. We do see a good pipeline there, and we will see how that plays out in the coming quarters. Keeping all those things in mind and the global environment in terms of the macro, we decided to keep the guidance at 2 to 3 with all of those factors that I mentioned. On the H visa, what we've shared in the past, what we've shared recently, first, our US workforce, the number of people that require Infosys sponsorship for immigration is a minority. So the majority of the people don't require it from our perspective. Second, we've built a large number of centers and hubs which are focused on digital, on innovation, on technology and AI in the US. We have relationships with universities. We have a training facility there. With all of that in mind, we are clear today that we will work with our clients without any disruption to their services and into the future. We don't have any specific information to share on the numbers that you had suggested.
When you say a minority was dependent on the H-1B visa, could you give us, in percentage terms, how many of your employees that you were sending abroad were on these visas? And when you say there won't be any disruption, how exactly will that play out?
So there, we don't share the specific numbers, but the majority of our employees in the US are employees who don't require any Infosys immigration support. The way we are working with our clients, we've reached out to each of them and made sure that we see and they see how their delivery continuity becomes on track and remains the way it is right now. Then On Versant, so first, there's nothing in the this quarter. They're going through all the approvals and so on. So the regulatory approval, which is a normal process, we'd anticipated it would come sometime in the coming months. Yes, we are very much looking at other acquisitions. We have a good pipeline. We don't know when those will materialize, but there are some opportunities there which we're looking at.
Sorry, the question on Versant was, going forward, what kind of contribution to revenue do you expect? And in M&A, what are the areas, what are the geographies where you're looking to fill the gaps?
On the contribution, we don't have anything to share now. When it closes, we will be in a position to give that information. Is there anything more on Versant?
I think we have given the last year's numbers of Versant already in the stock exchange filings, that we did last time when we announced that. So you can make an estimate based on that. But just to add to what Salil was saying on the guidance as well, if you look at the commentary last time when we gave a guidance, we very clearly said that the upper end of the guidance is where we are expecting stability in the environment, and the lower end of the guidance is where we are expecting worsening in the environment, right? As we stand today, the environment still remains uncertain, and despite that, on the back of Q2 performance, we have tightened our guidance, where again, we are very clearly saying that at the lower end, we expect the worsening of the environment, and the upper end, we are expecting stability in the environment, right?
On AI, I think we are scaling up massively on AI. We have a large team of FDEs. We are doing a lot of projects on enterprise AI with clients, on growth, which is focused like in the sales function or marketing function, on cost, which is focused on many of their processes, optimizing them, on customer service, on code development. So there's a broad set of AI work that we are doing with our clients. There's a large number of clients for which Infosys is today the AI partner of choice. So we're going quite well. We have strong partnerships with a lot of different large tech companies. We believe there's a huge amount of opportunity in the enterprise AI space. And with our experience on how to navigate within the enterprise landscape, we are quite well positioned to help with that.
Thank you. The next question is from Jude from ET Now.
Hi, Salil. Good to meet you here, and congratulations on that performance. You spoke about scaling up on the AI front. Could I get you to throw some light on what those specific deals are like? What is the AI order book shaping up to be at this point in time? And more importantly, what will your hiring trends be like for the rest of FY26? And I know for a fact that you have the confidence, which is why you've raised the lower end of the guidance. But what is the overall demand environment shaping up to be like for the fiscal?
So on AI, I think what we see today is a lot of interest where there's deep work going on, whether it's on a specific knowledge process or it's in credit risk, or there's work doing on software development, or there's work going on customer service. So broad area of AI projects that we are working on. In some cases, we're working across an enterprise on transforming that enterprise from an AI perspective and making them the leading enterprise in their industry in AI. So good traction there. In fact, we have more and more of this that we want to start to share in the sense of what are the approach that we are taking, how it's working, and you'll see that as we go through in the next few months. On the environment, as Jayesh was sharing, the environment is still uncertain. And what we see today is some changes in where the global environment macro is looking. We still see in some of our large markets that there is growth, but there's also some inflation, there's job creation, which is constrained. In some other markets, there are cost constraints. Some industries are seeing that. So that's a mix. Equally, we are seeing a lot of strength, for example, in financial services. Our client base is doing very well. We see extremely good growth. We've seen good growth in manufacturing in this quarter. We have a portfolio where we are across all of these different industries, which helps us to deliver the kind of performance that we've delivered for this quarter. On terms of hiring,
So if you look at our hiring for this quarter, our net addition is already at 8,000. We had given a guidance in terms of the fresh hiring for the year, and we had said 15 to 20,000 what we expect. We have hired in the first half 12,000 plus freshers already, so we are well on our track to hire close to 20,000 this year.
Well, that is Infosys there. Salil Parekh taking us through the results for the company. Strong performance coming in there for Infosys for the second consecutive quarter. More importantly, telling our colleague Ritu Singh there that the H-1B issue should not be disruptive for Infosys. While not giving a specific number, that the US workforce for Infosys on an H-1B visa is quote-unquote in a minority. We will, of course, decode more and keep you posted on all the other earnings of the day and the top stories. But for now, it's a wrap on this edition of Business 360. Stay tuned. Lots more coming up.